Good morning, traders. It is Monday, 15 December, which means it's Markup Monday. I hope you all had a good weekend. And let's just get started with another trade week just before the holidays, so volume is still okay this week. Let's get started with the first chart. It's the 15-minute chart of NASDAQ. So let's see what kind of key levels we have. Let's start from the previous days. What is still not mitigated? So you can see price has been ranging for a couple days, which means that the key levels that were there on the market profile are mitigated on the next day, just like this spike, mitigated like 2 days later. So I think the only information that we're having is from Thursday and Friday. Let's zoom in a bit more. And if you're doubting about the key levels, let's just put the indicator dynamic levels on. Let's see. Nothing from Thursday, so we're only having the information from Friday. And if I put this indicator off, you can already see some certain spikes on the market profile. These are the levels that we are looking for, the ones that are really standing out. So in that case, I would definitely mark up this one. There's nothing here, everything is mitigated. And I would mark up this one as well, because price has been hanging around here and then made this bearish movement. Same here, price has been hanging around here and made the bearish movement. It makes it extra interesting because you have this, which means liquidity. You got equal highs just below that level. And let's see if we got anything below the current price. Maybe from days before. Let's see. We got the POC from 25th of November. Only from then. So I guess this is it for the NASDAQ. Definitely some spikes from Friday. That one. And then a lower level is the POC from the 25th of November. Now let's go to S&P. S&P is like a bit correlated with the movement of the NASDAQ. The only difference is NASDAQ is 100 companies and S&P is 500 companies. So S&P is a bit more slower, less volatile in the movements, which makes it actually like one of my favorite pairs to trade. It's more clear on the chart. Let's see which levels we can mark up. Same movement, as you can see. It's been ranging for a couple days. So the levels that we had on these market profiles are already mitigated on the next days. So again, we are only having the information from Friday. Let's put the indicator on. I got the feeling that is this spike, but let's put the indicator on just in case. Yes, I see that this level is the one. This is like the same on the NASDAQ. You see that price has been hanging around and then made the bearish drop. We had a spike here, but it's already mitigated this morning during Asian session. POC is mitigated, and that's it for Friday. I am gonna mark up this spike here, and why? Maybe it doesn't stand out a lot, but the thing is, price was here, and then it had a gap on the next day. And it's not a rollover gap, it's just a price gap. And the interesting thing is as well is that we have these equal highs, which means for me, we got liquidity because most of the stop losses are like above a daily high or below a daily low. And this is a daily high. So in that case, I am marking up this level. If price comes back to here, it's closing the gap. It's taking out these daily high. equal highs. And then it could be like a potential sell reverse from here. So we have this level, nothing here. Something from, let's see, also from the 25th of November. Okay, just like the NASDAQ. All right, that's it for S&P. Spike here at the top, equal highs, another spike here where it made that bearish drop, and then a key level from the 25th of November, but that is way lower from the current price. All right, last one, gold. Let's see what we have here. We still have quite some levels that are not mitigated yet, just like those two from the 27th of November. And then we have the POC from the 10th of December, 11th of December, including a volume spike. And let's see what we can mark from last Friday. Quite some spikes, as you can see. Like the spike here, but as you can see, it's already mitigated. Spike here, not valid. POC, I have to zoom in a bit more, but I can see that we had a wick candle here and took out the POC. See some spikes here, but this one is standing out for me because price has been hanging around here and then made the bullish movement. So I would mark up this level here. And just to confirm extra with the dynamic levels, let's see, it is definitely hanging around here and then a bit higher and then here at the top. So I'm keeping this level on based on the fact that price has been hanging around this level. Definitely here. I mean, these are 15-minute candles, so price has been hanging around here for like 1.5 hours. It's definitely very strong and then made that bullish movement. So these are the levels for gold. I don't know if we have anything above that level from Friday daily high. Let's double check. Oh, we got a high here. Was that the all-time high? That could be. That could be the case. Yeah, that could definitely be the case. So these are the levels for gold. Yes. So volume spike from Friday. From Thursday, POC and the volume spike. And from the 10th, we had a POC. And still those two levels from the 27th of November. All right. If you got any questions, I'll leave the screenshots of the levels in the Discord and let me know. And I wish you all a very good and profitable trading week.